We are moving on to the next chapter, chapter number 15, that is provisions and reserves. It is a very small chapter and it is a theory chapter. You don't have to learn any problems, just learn what is provision, what is reserve, types of reserve, and about secret reserve. That secret reserve term is familiar to you. Again, provision and reserve is also familiar to you. You have written the same in your balance sheet and all. You would be knowing the meaning and all. So, we will discuss what is provision first. We know that we are following certain accounting principles, isn't it? We means the firm is following certain accounting principles for recording their transactions, for maintaining their financial account. So, one such accounting concept is going concern concept or going concern assumption. According to going concern assumption, what are we assuming? That the firm will keep on continuing or the firm will continue for an unforeseeable period. Meaning is it will not shut down in the near future, it will keep on continuing. So, we have such an assumption. So, when we compute the net profits, when the firm is calculating the net profits by doing the financial statements, that time we have to consider the future contingencies also. What is future contingency or what is the meaning of contingency? Contingency means it is the events that might happen in future. That might happen, it is not certain. Okay. So, such future events also we have to consider, then only we can arrive at the correct net profit. So, this provision and reserves are such future contingencies. Actually, we are keeping aside some amount for future needs. So, that is provision and reserves basic meaning, and we have to consider this since we are following this going concern concept. Okay. So, the first heading what you can write is the meaning you need to learn for provision and reserve. Only that you need to learn actually from this chapter. So, provision, as you all know, it is the amount set aside out of profit to meet future contingencies. And one word you have to specify there is, it is the amount set aside to meet specific purpose, or it is to provide for, or it is to meet any particular purpose. Understood? So, that is the term you have to specify. Then it is like retainment of profits. Retainment means we are holding back some profit, and that is a temporary retainment. It is a temporary retainment of profits, and why we are keeping it aside? To meet a specific purpose. So, this is the basic meaning of provision. And so, the provision is the amount which we are keeping aside for a specific purpose. That means it is a non-liability, but the amount cannot be ascertained with accuracy. Okay, it is for a non-liability or it is for a specific purpose, amount of which we cannot ascertain with accuracy. The best example we have learned already, that means in the first theory chapters we have discussed about provision for bad debts or provision for doubtful debts. Both are same. Provision for bad or doubtful debts. Expecting bad debts in future. Bad debts means the amount which we cannot recover from debtors. Expecting that we are keeping some amount as provision well in advance. So, that will be only an estimated amount. We don't know what will be the amount of bad debts in future. Suppose we kept a provision like 25,000. We have discussed such an example in that first chapter. 25,000 we kept as provision, but the bad debts actually amounted to rupees 30,000. We have kept only a provision of 25. So only up to 25 we can meet. Rest will remain as a loss for the firm. It will remain as bad debts since we kept only 25,000. Sometimes the bad debts will be only 20,000. So we can easily meet the provision amount, not the provision, we can easily meet the bad debts amount from this provision. Still we'll have a balance of 5,000 in provision. Can we use that 5,000 for any other purpose? No, it can be utilized only for this specific purpose. That is the first point. Understood? So we can't use, even if there is a balance in provision for rupees 5,000, that you can't make use of for any other purpose, and this will lead to a limitation, that will lead to creation of secret reserve. All these we have learned in that accounting concepts conventions chapter. According to prudence or conservatism, we have learned this, that creation of secret reserve and all. Understood? So provision, this is the meaning. You have to write the example, you can write depending upon the marks, or else if they ask you just the meaning for 1 mark, this is enough. These points you can combine and write. Understood? So you must write notes of this chapter also, though it is theory chapter, you must write notes. So these are the points which you need to write for provision. Now, examples of provision you can write. One is provision for doubtful debts. Then you can write provision for tax. Then provision for depreciation. Then in that chapter adjustment we have discussed one provision, that is provision for discount on debtor. So all these examples you can write. Okay. Next one is the second term which we need to study in this chapter is reserves. Only the meaning you need to learn, no need to go into detail like advantages, disadvantages. You can just read, that is enough. Reserves. Okay, reserves is also similar to provision. It is also the amount which we keep aside out of profit, or which we set aside out of profit to meet unknown liabilities. The other one was mainly non-liability. This is unknown liabilities or unforeseen liabilities. You can write unforeseen or unknown liabilities or losses. Understood? So that is the main term you have to remember for reserves, and this helps in, that means creation of reserves helps to strengthen the financial position of the firm. So how it is helping to strengthen the financial position? So that is also an amount you are keeping aside, and that is to meet any unforeseen contingencies. Understood? The other one was non-liability. This is unknown. This is to meet unknown liability. And it will help to strengthen the financial position because suppose we have kept a reserve of 50,000, 50, okay, we have kept a reserve of 50,000. When you have an emergency in future, you can make use of this 50,000. That is the meaning of it helps to strengthen the financial position. The reserve can be used, the reserve amount can be used during times of financial difficulties. Understood? So you can make use of the amount if you have a reserve with you at times of emergencies. So that is the meaning of it helps to strengthen the financial position of the firm. Then the reserve can be invested in outside securities. Okay, suppose you kept a reserve like 50,000, you kept it aside out of profit. 50,000 you have kept as reserve, and out of this 50 you invested 20,000 in shares of A Limited. A Limited can be the name of other firm. Okay, not your firm. You have invested your amount in A Limited and you got their shares. That's the meaning. So 20,000 you invested in A Limited and you bought their shares. So this can be done using this reserve amount. Understood? So these are the advantages, or these are the uses of reserve, and when you invest some amount in outside securities, this will be termed as reserve fund. Okay. If you don't want, that means it is not compulsory that you have to invest out of your reserves. If the firm decides to invest, they can do so, or else if nothing is invested, that means it is kept as reserve itself, it is not invested in outside securities. If there is no specific investment made, you can term it as reserve itself. It will be termed as reserve, otherwise it will be termed as reserve fund. If it is utilized for investing in other securities, you can term it as reserve fund, or if there is no investment made from that amount of 50,000, term it as reserve. Okay. So these are the points you have to write under reserves, the meaning of reserves. Then example you can write like general reserve, which is familiar term for you. General reserve is there. Then we have like reserve for expansion, that means for the expansion of the business, expansion of the firm. Then reserve for dividend equalization. Okay, so all these examples you can write there. Next is types of reserve. Types of reserve we have like revenue reserve. Revenue reserve means again it is a reserve which is created by keeping aside some amount out of profit which is available for distribution as dividend. This is the meaning. You are keeping it aside out of profit that is available for distribution as dividend. Now what is dividend? Dividend means it is the return which we are giving, which the firm is giving to its shareholders. See, just like we invested 20,000 in A Limited, other companies, other firms will invest in our firm. That means they are buying our shares. So that time, if they are buying our shares, we'll have to give them a return on what they are investing. So that return is referred as dividend. Okay, the dividend means the return which we give on shares. To whom we are giving? To the shareholders. So we have some amount or some profit which is available for dividend distribution. Out of that profit, when you keep a reserve, that is termed as revenue reserve. Okay, then revenue reserve we have two types. One is general reserve and the other one is specific reserve. As the name indicates, general reserve means it can be used for any purpose. Any future contingency arises, you can make use of this general reserve. There. Whereas specific reserve is more like a provision that can be utilized only for that specific purpose for which it is created. Example for specific, example for general reserve is general reserve itself. Okay, that is the example. Now specific reserve you can write examples like workman compensation reserve. All these we will be discussing in detail in 12th standard. We have to learn journal entries and all for this. So next standard we will discuss in detail. Now you just learn this term. Workman compensation reserve. Then we have like investment fluctuation reserve. Then reserve for expansion, reserve for dividend equalization. When they specify the purpose, that will become specific reserve. Okay. Now workman compensation reserve, as the name indicates, is a reserve kept for compensating the workers, for paying compensation to workers. Then investment fluctuation reserve, it is a reserve to meet the fluctuations. Fluctuations means changes in the value of investment. Then reserve for dividend equalization. Dividend equalization means we know that we will have to give a return to shareholders, that's called dividend. Okay, so we will have to pay them a regular return for what they invest. So when you have enough profit, we will transfer some amount to this dividend equalization reserve. So what is the benefit of that? Suppose this year we had enough profit, we transferred some amount to dividend equalization reserve and we could distribute the dividend to shareholders. Okay. Next year we incurred a loss. Suppose we incurred a loss in the next year. So we are not able to give them dividend. So that time you can use this particular reserve for dividend equalization we have created last year. No, that amount we can use and we can distribute dividend even if it is a loss in the next year. Okay, I just explained the meaning. You don't have to go into detail. You just write these names as examples for specific reserve. Okay, then we have, so this is the classification of revenue reserve, which is divided into general reserve and specific reserve. Then we have capital reserve, that is next type of reserve. Capital reserve is the reserve set aside out of profit, which is normally not available for, it will be the opposite of revenue reserve. So it is not available for distribution as dividend. This is also kept aside out of profit. We are keeping reserve out of profit, but this is the profit which is not available for distribution as dividend. Example for such profits are, or example for capital reserve, you can write profit prior to incorporation, or you can write premium on issue of shares or debentures. Then profit on sale of fixed assets. So many examples are given in your textbook, you can go through that. Then profit on redemption of debentures. See, all these are capital profits, or all these are capital reserves. You can't use these amounts, normally you will not use these profits for dividend distribution. And out of these profits, when you keep aside some reserve, that is termed as capital reserve. Okay, and these profits will not be utilized for dividend distribution. Profit prior to incorporation means prior to the constitution or registration of your firm. Okay, and such profits cannot be utilized for, will not be normally utilized for distribution of dividend. Then premium on issue of shares or debentures. When we issue shares to others, of course we will get money. That is a way of raising finance. Okay, and we can issue shares at a price higher than its actual price. That's called shares issued at premium. Premium means higher than the actual price. So that way also you can make profit. And out of this profit, when you keep aside some amount as reserve, that is called capital reserve. Then similarly, profit on sale of fixed assets. You say, suppose you sold furniture or you sold machinery, and you can make a profit out of that, isn't it? The machinery worth 20,000 sold for 30,000. You are getting a profit of 10,000. But that is normally not made for distribution of dividend. From that profit, from that 10,000, suppose you kept a reserve of 2,000. That is termed as capital reserve. Okay, so that's the meaning of capital reserve. It is kept aside out of profits, which is normally not available for distribution of dividend. Then profit on redemption of debentures. Redemption means a repayment of debentures. When you pay back the amount, that time if you can make a profit, and out of that profit, if you keep a reserve, that is capital reserve. Okay, so these are the types of reserve, that is basically revenue reserve and capital reserve. Revenue reserve, we have general reserve and specific reserve. Okay, so examples you can write this for your capital reserve. So types of reserves over with that. Then as a next topic you can just write, which is a familiar term for you. When you get a question like types of reserves, you just have to write revenue reserve and capital reserve. This you give as a separate heading, secret reserve. Okay, and that you have learned in that portion, prudence or conservatism. The limitation as limitation of prudence or conservatism, we have discussed this particular term, secret reserve. Secret reserve, or it can be called as hidden reserve. Because why it is hidden? The amount of which or its existence is not disclosed in the balance sheet. Amount of which is not disclosed. Disclosed means it's not recorded in the, or it's not revealed in the balance sheet. Okay, so that is secret reserve. Existence or the amount of which is not recorded or not revealed in the balance sheet, so it is hidden reserve or it is termed as secret reserve. Examples what we can write is, or how it is leading to creation of secret reserve. One is when you keep excess provision for doubtful debts, that we have learnt before. Excess provision for doubtful or bad debts. So that is leading to creation of secret reserve. Then when you keep excess provision for depreciation, then when you consider a contingent liability as a real liability. I'll explain this. At least these three you try to remember, okay? The cases which leads to creation of secret reserve. One is excess provision that we discussed in this first example, no? With that 25,000, I gave you one example. Bad debts 20,000, but we kept a provision of 25. So after meeting bad debts, still we have a balance in your provision like 5,000. The same thing can happen in case of provision for depreciation also. So we have a balance of 5,000, but can we make use of that 5,000 for any other purpose? No, because that is a specific provision, and that way it is leading to creation of secret reserve. Understood? So this is that 5,000 will remain as a secret reserve which we can't use for any other purpose. Similarly, if you keep an excess provision for depreciation, the same thing will happen. If you have kept an excess amount as depreciation, as provision for depreciation, we can't use it for any other purpose. It will remain as a hidden reserve. Then when you consider a contingent liability means the liability which has not become a liability. As of now it is not a liability, but in future it might become a liability. Understood? It might or might not become a liability in future depending on happening of an event. I have discussed this contingent liability in that chapter financial statements. You can go and refer what is contingent liability. Understood? So based on event, it might become a liability, sometimes it will not become a liability. So you don't have to consider now it as a liability. Sometimes the firm accidentally, sometimes they consider contingent liabilities as real liabilities. What will happen? They will show it in the balance sheet. Understood? So that is reducing your financial solvency. Financial position is getting affected because of that. So that is leading to creation of secret reserve, because we are expecting a liability and we are keeping a reserve actually, or we are keeping a provision for that. But actually it is not a liability. Okay, it has not become a liability. You don't have to provide for such liabilities, but you considered it as a real liability. You kept a reserve for that. that way it is leading to creation of secret reserve. So at least these 3 examples you keep in your mind. First example of secret reserve. It is not a type of reserve. Type of reserve you just have to write revenue reserve and capital reserve. Secret reserve means when you keep a provision, excess provision, that time it will lead to creation of secret reserve. That is another topic, that is separate topic. Okay. So only so much you need to learn from this chapter. No need to go into detail, but you can go through that. I mean, you can read the advantages, disadvantages and all. But at least when you learn all these. The meaning you learn. Okay. Learn means don't by heart. You just have to understand the meaning. Okay. So with this chapter is over.